Yeah. Hey, Dave, did you hear him call that market correction a breather? That
Just
seemed
a
really,
breather.
really
That seems-
comfortable
yeah.
to me. Yeah, I'm going to use that one next time.
Yeah, next time the market's down 20%, I'll just call it a little breather.
Hi, my name is Ren Leggi, Client Portfolio Manager with ARK Invest. On this season of The Switch, we're going to address 4 market inefficiencies that we see within the public equity markets for innovative stocks. As always, we'll be joined by ETF trends to facilitate the discussion and make sure that we don't leave anything unanswered. So let's get the conversation started with the market's short-term time horizon.
Yeah, Ren, just to get started, when you think about the average investor out there and all the technology that they have available, we just can't help ourselves. But look at our portfolios every day. I mean, what is it about human nature that messes with our minds where we feel we have to be trading almost on a weekly basis in order to be productive in our portfolios when we know long term, if we just let the managers do their job, we're going to be much better off?
Yeah, and I think that's especially true in the case of innovation, right? These technologies evolve over several years, right? And when we're talking about autonomous vehicles, for instance, this isn't going to happen tomorrow. There's no need to necessarily trade on a daily basis, although we do see a lot of volatility in some of these stocks because they're inherently controversial in some cases. And so we could use that to our advantage, but we're always focused on that longer term time horizon, right? That's important. We're looking at it from a minimum of 5 years out. And that's where we're seeing probably in the 1 to 5 year period where a lot of investors are just kind of missing or maybe misunderstanding the exponential nature of some of these technologies.
Is there a bit of a sort of a disconnect between how the capital markets think about companies and how investors think about companies? What I mean by that is, you think about people looking at quarterly returns. At some point that has to matter, right? If you're in one of the major indexes, you're now a large cap company. Whether or not you hit your quarterly numbers, whether or not you can make a dividend payment actually matters. But a lot of the companies you're looking at, some of them are barely making any money at all. So how do you square the circle on those two things where you've got quarterly focus, but technologies that may take a decade to pan out?
Yeah, that's a good point, right? And what we've seen over the last decade has been a lot of investors have flooded in to passive vehicles, right? And so they're not really incentivized to really think beyond the next year, right? They're so honed in on earnings, right? And we're looking at it from kind of the top-down perspective. How big are these technologies going to be, and who's best positioned to be the winner, right? So we listen to our analyst team, listen to every single earnings call. We're not concerned about whether they, beat earnings by a penny. It's about, understanding where are they investing, right? Are they investing strategically in R&D? Are they increasing their capital expenditures? Are they making strategic acquisitions in some of these areas that is going to put them at a strategic advantage, right? So, that's where you have to have this longer term view, but you can incorporate short term, information, right? That happens every day, right? We're constantly talking about the news in the stocks, and we're changing kind of, our views as a result of this new information coming in. But our longer term views from the technology standpoint, tend to be the same kind of range on sizing of these opportunities.
Yeah. And speaking of news, Ren, boy, in 2020, ARK was all over the news. But also in the first half of 2021, we saw a major pullback in a lot of the companies that you had high conviction on. Did that work right into your hand as far as being able to reposition portfolios, knowing that over time, this is not strange to you? High conviction, it comes along with volatility in some of the stocks, right?
Yes, I mean, that gave us a great opportunity to reposition our portfolio. I mean, we don't want to see the market go straight up and to the right? These breathers are actually good for the market. It actually signals to us that the bull market is strengthening and broadening out. So that rotation from growth to value it put some pressure on our strategies, right? We were down, more than 30% off our highs, but that gave us a great opportunity. Not only for our investors to build their positions, but also some of the investors that haven't allocated to ARK to get in. But that also gave us, from our perspective, an opportunity to build our positions in some of these highest conviction names.
Yeah. Hey, Dave, did you hear him call that market correction a breather? That seemed really comfortable to me. Yeah, I'm going to use that one next time.
Yeah, next time the market's down 20%, I'll just call it a little breather. Ren, one thing I was wondering, and I genuinely don't know the answer to this question. I went to business school. I went through all those discounted cash flow analysis classes like everybody else. And that's sort of the way Wall Street thinks about analyzing a company. You make some projections about earnings, you do a little bit of analysis, you get an interest-free rate or risk-free rate, you do some math, and you know what a company's worth. But you guys are thinking about 5 years out for technologies that often haven't even been adopted yet. How do you do the analysis to have a long-term view like that, without really any of the traditional data that idiots like me would use?
I mean, so it's all first principles research, right? And it starts from that top down, and it's all about looking at the cost declines, right, associated with these technologies. And what allows us to really come up with these adoption curves for these technologies is looking at that cost decline, right, and identifying, have we hit a tipping point in that cost structure for these technologies that's going to unleash a tremendous amount of demand, right? And from there, we can build these adoption curves and ultimately get at, well, what's the total addressable market for, say, electric vehicles, right? And if that is substantially higher than what Wall Street is expecting, right? Maybe they're coming in at expecting in 2025, 6 to 8 million EVs will be sold globally. We're coming in at 40 million in 2025. Hey, it's likely that the stocks associated with EVs is likely undervalued. And so that's where we're looking to kind of play and identify the leaders in each of these areas.
Briefly, Ren, during COVID, we know that the growth cycles actually sped up for a lot of the innovative companies that you folks bought. As we're coming out of the other side of COVID, do you look at it differently now?
Well, certainly the world has changed as we know it, right? I think as the world is starting to open up, people are thinking that they're going to go back to the old ways, but technology, a lot of these technologies that we've been investing in, Zoom, for instance, we think is going to be here to stay, right? The work environment is completely changing. Are we going to go back to the office 5 days a week? I don't think so. It's going to be a hybrid environment, right? And so you'll still be keeping, your Zoom subscription. So what the market has done more recently has been basically sold off on a lot of these stay-at-home stocks, right? And so we see these, really the total addressable market is expanding for some of these names because they are, essential to our day of life now, even if everything opens up and we are in kind of a normal economy state. A lot of these technologies have gained so much attraction that it's very hard for us to go back on that. Right, because they've made our lives easier.
We're asking a lot of the same questions. Are we ever going to go back to the office? Is Dave ever going to wear pants again? We just don't know.
Hey, Ren, one question I had about your process, right? So you talk about this 5-year time horizon and some of this deep analysis you do on things like tech adoption, but at the same time, boy, the news cycle moves like nanosecond by nanosecond, right? So how do you have that long-term view but incorporate all of this information that's changing every single day? What's the cycle time on it, analyzing whether or not you still think you're right about a position you may have taken a month ago?
Yes. So, I mean, our analyst team is taking in that information on a daily basis, and we're reporting it up through the broader team, Kathy and our director of research, Brett Wynn, and some news events could impact either from the technology level or the individual stock level. And so we have a schedule that a consistent weekly schedule where we come back and, the team gets together to analyze some of that information. And it could impact, some of our longer term forecasts. But generally we don't see.
Right, things change, right?
Yeah, things change, right? And one of the great benefits of managing public equity portfolios, not being a venture capitalist investor, is that we can sell out of a stock.
You can get out.
If something changes, our view changes, or technology comes along and we think is going to be more disruptive than the one we're focused on, we can exit, and we can do that very quickly, right? For a private investor, that may not be, that may take years to unwind some of these positions, right? So when the world is rapidly changing, right, you want to have that ability to exit and find new opportunities. And there's stocks we've exited where we've come back to because they've reinvested, they made some good strategic acquisitions, and it's resurfaced in the portfolios.
Yeah. Hey, Ren, you've surely been in the spotlight in the last few years, and not only that, the high conviction stocks that you own are talked about every day. Are there disadvantages to that, or do you feel that basically with the size that you are now and the amount of money that you're managing, it actually gives you freedom to swoop in and buy other opportunities?
We like to put our opinions out there, right, and really battle test them. So we put all of our research out there. Some stocks get covered more than others, by the media, and that's great. They tend to be the more controversial ones where we have very high conviction in, right? So Tesla's a great example of that. But as part of that process, we get a lot of feedback, right, from the communities. They're very, when it's out there, people are very quick to say, hey, you're wrong about this, you're wrong about that, right? So we... Yeah.
Welcome to the internet.
It's out there. Other firms don't like to put anything out there, so no one's telling them they're wrong about anything, and they just keep doing what they're doing. So I think it's a valuable. We think it's a valuable feedback loop where we're constantly getting. And some of these people that are commenting are leaders in these spaces, right? They're entrepreneurs. They're people or even professors that are they know the space, and we learn from them. So we invite them sometimes. If they disagree with us, we say, well, come on in. Let's have a chat. Let's figure it out. Why are we coming to two different conclusions about the same area? What data do you have? Let's share our data. And sometimes, it's a matter of the business case, right? They're thinking more at the very granular technology level. We may be thinking about the business case for it, right? Because of demand, or like cost is declining, demand's going to increase. And so, they come to a different conclusion. And there's many cases where, taking inputs from both sides, we became more in agreement over time from learning from one another. All right. Thanks, Dave and Tom. As always, it's been fun. We'll see you on next episode.